Hi there, welcome to Neppy Invest. A few videos ago, I did raise a question about Mitchell Services and wonder whether that company was the cheapest company on the ASX. It's more of a rhetorical question. I don't necessarily believe that. I do think Mitchell Services is quite cheap. But when I think of the cheapest company on the ASX, my thinking turns to the company I'm going to do a video on today, and that is Mitchell, or not Mitchell, MCS Security. And it is sort of a personal security. So it's one of those companies where they provide that security services for, say, stadiums, shopping malls. So it's more of a human capital, that sort of thing. So human capital sort of businesses provide very low margins because human wages or wages tend to be quite high. Now, this is an extremely cheap company in terms of valuation. So when you look at the market cap of this company, it's about $4 million. And then when you look at some other metrics, they are fairly cheap. So I'm going to get into that in a minute or so. And then they released their quarterly cash flow report a few days ago, and it looked pretty good. In fact, there are some indications this was unusually good Appendix 4C for this company, and I'll talk about why. So there is a chance that this could be a turning point, an inflection point of the company. The share price or the market did react very positive to the release of this Appendix 4C, and whether they can maintain that positiveness moving forward is, I think, the big question. So let's have a look why the market and myself is quite bullish with this quarterly cash flow report. So just looking at operating cash flow, so they produced $8.8 million in cash receipts in this quarter, and that meant they were cash flow positive to the tune of $804,000. So again, low margin sort of business, but having a cash flow positive in operations of $804,000 is, it may not seem a lot, but when you think the market cap of this company is $4 million, I'll just go to the next slide. So the market cap is $4 million. They have cash. So right here is a consolidated statement of cash. So it looks at the cash at the beginning of the period, adds up all the cash from operating, investing, and finances, and then comes to a cash at the end of the period. So increase the cash by almost $700,000 from 2 million to 2.8 million. So that means that it's increasing that cash. So it means they have an enterprise value of 1.2 million. So they produce cash of 800,000 in one quarter, and they have an enterprise value of 1.2. That's cheap. I don't care what you talk about. If you have a cheaper company on the ASX based off that sort of numbers, leave it in the comment section because I want to know about it. So as I mentioned before, I think the risk around this company are very small, just simply because of those numbers, and the rewards are quite high because the market cap of a similar sort of company, you could think of this being $40 million or so, which probably would be expensive. But say 20 million, which is a 5-time bagger from here or 5-bagger from here, even that wouldn't be that expensive when you think if they can maintain $800,000 cash flow per quarter, that's say $3 million cash flow per year, $20 million market cap's not that expensive at all. So of course, what's very important for me is the history and cash receipts. So this is looking at cash receipts, that's that blue bars, and I've also put the cash flow here. So it's actually looking positive on both ends. Cash receipts are increasing slowly, gradually, but it's something I like to see. In fact, there's something about this October 20 which was a little bit unusual. Typically, if you look at all the Octobers here, October tends to be one of their weakest quarters. In fact, let's go to the start here. So April, July tends to be their strongest quarters, and October, January tends to be the weakest ones. So every single time we've gone from July to October, so 5.2 to 4.2 in 2016. In 2017, went from 5.1 to 5. In 2018, 5.4 to 4.7. In 2019, went from 7.7 to 6.1. This year went from 7.6 to 8.8. Whether that's a one-off, I don't know. We'll have to wait and see. But it is their record cash receipt quarter by almost $1 million. So they are getting some traction. So the company's solely situated in WA. They are looking at expanding into other states. So that's something else you have to take into consideration. And then when you look at cash flow, so towards 2016-17, they were largely cash flow negative. Then when they got in 2018, that became more cash flow even. And then the last few years, they're becoming more and more cash flow positive. That also has to be a bit of a sort of a signal that this company is starting to turn around. It's starting to reach an inflection point. And when a company reaches an inflection point, we can see share price take a trip on the upside for quite a while. There are some other reports that are quite bullish. So they did not get any government support, so no JobKeeper or anything like that. So a lot of companies are getting a lot of support from the government, and they're using that support to, tell the world that they're highly profitable, that sort of thing. Everything's going great. When everything take away all that government support, the underlying business itself is not doing that great. So this isn't based off any government support. This is the company doing well. One of the things I want them to think about, and they are thinking about it, is to find ways that it can increase their gross margins or their profit margins, and they're talking about that in the two next sections. They've also mentioned right at the end there, the company's assessing the addition of new verticals to its business. They're looking at growth opportunities in other states, organic growth opportunities too. So I think the management is thinking about opportunities to increase their margins, and I think that's the most important thing here. Now, when you look at the charts, you'll notice, I definitely noticed this, is we have these spikes, and I've called them quarterly spikes. So what happens is MCS releases a quarterly cash flow report, and it's sort of like a sugar hit to the market. The market sees it and goes, oh my God, this is really good, and the company's so cheap. And then the share price just falls away. And you can see that in April 2019, around July 2019, and also in January 2020. So those are, remember, April, July tends to be the best quarters, so you can understand why you had that sugar hit in April, July 2019, and 2020 also was a fairly good one. Share price did fall away in COVID-19, awesome buying opportunities there at 1 cent, and then we've seen good rising in share price in the middle of this year. And then we saw the share price did fall away a little bit in the last few months, but this report did give another sugar hit to the market, and whether they can sustain this moving forward is the question. The share price in this time got to as high as 3.8 cents, which is a multi-year high. You can see the share price ended up at 2.8 cents, so well down from the high of the day, which suggests there's a fair bit of selling, but it's still up 33% on the open. When you look at the 1 year daily, so this is up to date for today, it's held on really well the last few days. It's around about 3 cents, holding well, good volume, and I think there are signs that this could be turning around that 2.8 to 3 cents is a support line. You can just see here around this level here, if you can follow my mouse here, see it reached highs in 3 occasions in June, July, and fell away. So that was a line of support around about the 2.8, 2.9 cents, and it's held on to that the last few days. So that could be a good support line moving forward. It's turned from a resistance line into a support line. So that's all I got for MCS Security. The ticker code is MSG, I believe. Yeah, it's a very cheap company. I'm looking to possibly putting a small bid in. If the share price over the next few weeks, next few months actually falls towards about the 2.5, 2.3 sort of range, that's a better opportunity, I think. So yeah, no complaints about this quarterly cash flow report from MCS Security. It was one of the 15 companies cash flow report I was looking forward to, and it's come through with good flying colours, I say. So if you have any comments, if you are an owner of this company, what did you think of it? Subscribe to my channel, and I'll give you a lot more videos about other companies, Appendix 4C. And again, I'm not a financial advisor. If you do need to seek financial advice, make sure you seek out a professional. So that's all for today. Have a good day. Talk to you later. Bye.